Hi, welcome to the Market Alert for Thursday, the 11th of May 2023. So CPI sparks panic bid in stocks yesterday, bonds, gold and crypto, and the dollar dumped. So that was the reaction to the CPI. We'll look at the numbers in just a moment. Treasuries rip on CPI and choppy risk appetite. And US stocks whipsawed but finished mostly higher, and treasuries rallied post CPI. The numbers for yesterday, we came in at year on year. We were forecast at, previous was 5%. We were forecast at 5, and we came in at 4.9, so down 0.1. And that was enough, or is enough now, for the market to move to the upside. It's staggering that you should have such a small drop, but there you go. The month on month came out higher, interestingly, but that doesn't stop the markets from moving back to the upside yesterday, and continuing to do so overnight. It's out of the way. We'll wait until Powell speaks next, which will be sometime in June, I suspect. That's about as much I can say on it. Very predictable, really, isn't it? Today's news, Bank of England monetary reports. You've got the official bank rate votes, and a monetary policy summary, and then the official bank rate. So we've got a forecast here of rates increasing by 2.5%, and then Bailey is going to speak. A press conference at 12:30. Then over to the US, core PPI for 1:30 p.m. and the unemployment claims as well. And then in the afternoon we've got Wallace speaking and a 30-year bond auction. But this leaves the market free to move to the upside this morning, with waiting for the interest rate news at lunchtime. Okay, let's kick off. Have a look at the Dow. Interesting picture there for yesterday, particularly in the 30-minute chart. And in the Dow, yesterday you can see we breached the 50 EMA there quite well. We moved down. And also, if we just draw in a few lines here, from here to here, you'll see that we came back to the golden ratio of 62%. But what's really interesting is the 30-minute charts. That 62% ties in with the S3. And if we get down to the S3 or up to the S3 on the upside, then you generally see the market stop and reverse at this area. And a very high percentage as well, in the 90s. When it does this, and you can see that yesterday, and also now the market's moving back towards yesterday's high, which will be easily achieved during today. But yesterday the market's reaction to the CPI numbers was up, and then we sold off, like I say, down to that 62% in the daily chart, which you see there, and that ties in with the S3 there, which has a 90+% chance of reversing. We've got a crossover, we're oversold, the momentum starts to move up, and that's exactly what we did. And we then came back 100, 200, 300 points in the Dow there. In the German DAX, similar picture, nowhere near the 50 EMA though, but the 20-bar moving average, the market traded below this, and overnight you can see we're already heading back to yesterday's high, which will be no problem at all. They want the market back to the all-time highs in the German DAX, and you can see we've already taken out the 38, the 50, we're at the 62 at the moment. And if we look at the 30-minute chart for yesterday, we sold off initially in the morning. Where did we sell to? The low. What happened at the low? We thought we see the buying coming in. What happens after this? We then move up with the CPI numbers. We then sell off with the Dow. We go down to the S2, not the S3 that we saw in the Dow, but the S2 is still important. You'll still get a reversal off this area. Demand, momentum already moving up. We've got divergence, and we follow the Dow. And like I say, we're already moving back to the upside. Just bring this down and move it along. You will see that we're heading already to the high, and we're only 60 or 70 points. We'll do that at 7 o'clock when the market opens in the futures, and if not, we'll do it when the cash opens. So they're going to move the market back up, aren't they? If we go back to the monthly chart that we've looked at over the last week or so, always just keep an eye on the even bigger time frames if you can. You'll see that we're heading back to 16,298. If we couldn't move down yesterday, there's no other major news now, so the market's free to move to the upside. Obviously, barring any sort of regional bank bankruptcy or delinquencies, etc. But at the moment, it's looking good. The only thing I will say is that we have been getting the sell-off first thing in the morning once the market's moved up in the pre-market, which you can see there, and then we have the sell-off. This has happened a few times this week. If we go back another day here, again, we crept down here. You can still see that we headed down, and then the same for Monday as well. Just move across here. Oh no, it was closed, wasn't it, for Monday on the electronic markets for the 8th. But there is a pattern there. We saw it last week as well. But at the moment, we're marching to the upside. If we look at the overnight, you'll see this happening. There's the afternoon with the Dow. There's the CPI numbers. We traded up to the high and then sold off from the high. And then eventually down at that S2, again, you see a cluster of volume. We're oversold, and then we start moving back to the upside. But overnight, and so far at the moment, no problem at all. Nobody's selling stocks, of course, because this is all derivatives. So getting back to the high shouldn't be much of a problem. Might get a sell-off, as we did yesterday when it got to the high. Trade so far this week, £544 in profit. Profit factor of 5.46. We're looking at 79 to 21 win-loss ratio there. And in the S&P 500, this also down yesterday, but managing to close back above the 5-bar moving average, keeping this one green. We've got to take out the 78 and the 89 and the recent high in order to move higher. 30-minute charts, again, you can see that we sold off on the electronic session down to the S1. We then did a test, they bought back in, and then the market traded sideways before the CPI numbers. Then they traded up to the R3, and just the opposite of what we've seen in the Dow on the downside. If you get to the S3 or the R3, as I said earlier, you've got a 90% chance of the market reversing from this area. And that's precisely what we saw with the market trading down to the S2 and then all the way back up. And at the moment, we can see we're heading back to yesterday's high. In the FTSE, all eyes on Powell Bailey today. We've got a retracement here of about 78 to 89. Let me just draw that in for you. You get used to seeing these. And let me just remove these so you can see exactly where we are. So we came back to 78.89. We've got demand and we're starting to move back to the upside there. And just remove the upside targets because things have changed a bit. And there's the upside targets should the market move higher following the increase in interest rates later at midday. So yesterday the market down with the DAX, but then recovering with the CPI from the US following the Dow down and then back up. But resistance on the upside at the moment for this market. We'll have to see if it can get through this area here, which is going to be 7750, and then you've got the high up there at 7780. So it'll be interesting to see if it's got the legs to do that once rates increase at midday, or if they increase them, they may not. You never know. In the currencies, reaction to yesterday's CPI, GBP, JPY down. Market coming back around 50 to 62% there, bang on the golden ratio again, as you can see. Market sideways to higher. In the 30-minute charts, it was just down all the way, as can be seen there, all the way down to the S3. What happens at the S3? The market bounces off it there. So once again, overnight, you can see the importance of these lines, the low, the market coming off, oversold, and starting to make its way back. And if so, it needs to get above the DP, take out the 50 EMA, the BRN, and the 200 MA to make any progress towards yesterday's high. In the pound, sideways to higher, still green, but a bit of selling around yesterday. The market's coming off the highs, and you'll see why. And that's the picture. We were moving up quite nicely, but we then broke the 200 MA just before the US CPI numbers. The market up about 80 points, and then a straight reversal off the R2, making its way back down to the DP, where it's retested and then has moved up to the DP overnight, where it's found further selling. And now we're looking at the markets doing a retracement of 78% there, and then coming off there as it's oversold and trying to make its way back. It's got resistance at the moment with the 200 MA. This is probably going to trade sideways until the UK rate increase at midday. And in the US dollar, down yesterday overall by the close in the dollar index, stuck in this sideways range and still above the 100.835 there. And in the metals, silver was monkey hammered yesterday, but still stuck in a sideways range, still above $25 an ounce. Unbelievable price still. 30-minute chart, you can see there we were all fine until we had that 0.1% drop and up to the R2, sold off from the R2 all the way down to the S2, and overnight the market just trying to find a bit of support. We just draw this in from here to here. You will see that we've come down to 78% and we're trying to get a move on back to the upside through the averages and back to yesterday's high. Whether it can do this or not, who knows, but it's certainly under a lot of pressure on the downside. Gold also, as you can see there, being hammered yesterday as well. Up initially, should have stayed up, but they hammered it down because, like I say, they're continuing to buy lots of gold and have been doing, well, central banks should say have been buying gold like it's gone out of fashion since 2010, but more so in the last year. What a surprise. So there we go. It's certainly going to be an interesting one today. See whether the markets can sail back to the highs with no problem. They probably will do, but whether they can get through is going to be and maintain that is going to be key. And finally, gold-silver ratio moving back up because, as I say, silver got monkey hammered yesterday, back above 80 to the gold-silver ratio, back above 80. 80 silver coins to 1 ounce of gold there. So no surprise, this happens periodically, and that's what we're seeing here. Okay, that's it for this one. Like I say, see what happens when we get the rate increase at midday. And with that, as ever, thanks for watching. See you in the next one.